Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 17th, 2024, and I'm here to bring you some trading levels and a few favorite company stocks for the upcoming week of May 20th. Before I get going here, the usual disclaimer. Precision Trading Labs, we are neither money managers nor financial advisors. We do not present any investment advice. Everything we do is associated with helping our subscribers to become confident traders. And so everything we present to them is for educational and informational purposes only. So let's take a look at a bunch of these symbols here. So we'll start out by looking at Amazon here. Okay, so at any rate, Amazon closed at around 185 during the week that just concluded here. And so if we look above here, we have a rally base drop formation here. And so this represents an area of potential where we would be looking to express a bearish trade. And then beneath here, we have a rally base rally formation. And that is the origin of this very strong move here. And this is where we would be looking to express a bullish trade. Right here, inside of this area of consolidation before this very strong move, we supply and demand are in balance. We can think of the shares that are acquired by willing buyers as demand, and we can think of the shares offered by willing sellers as supply. Okay, so within this area of consolidation, um, supply and demand are in balance. And then what happens is there is an exhaustion of sellers here that creates this pop here. And so right here, essentially what happens is willing buyers are essentially having to run up the price chart until they encounter willing sellers. Up here, we have a rally-based drop formation, and essentially it's the exact opposite here. What happens here is that you have an exhaustion of buyers. Okay, and so right here, supply and demand are in balance, and then it goes out of balance by that exhaustion of buyers. And so what happens is when price returns to this area of supply, we expect that there is still some downward price pressure that's waiting to be tapped. And so at that point, this is where we would be looking to express a bearish trade. And of course, to express a bearish trade, we could either sell or short the stock here, or we could buy a put. We could also do a bear put vertical debit spread, or we could, of course, sell a credit spread by doing a bear call vertical credit spread, and then we could collect premium here. Down here, of course, we could buy the stock or buy a call or do a bull call vertical debit spread, or of course we could also do a bull put vertical credit spread and then collect premium here. The way we would express this trade up here is on the short side or the bearish side. This is where we would actually be selling. We would place our stop just beyond the top border of that supply zone, and so this is where we would get stopped out if this trade did not work. Okay, okay. So that's the story with Amazon here. So that supply zone is about 3% above the close here, and the demand zone is actually a fair distance down. That's about 6% below where we are. All right. So that's the story with Amazon. If we turn to Apple, so here's where we are with Apple. We closed here at around just below 190. Okay, the, here's where the 52-week high is. So we obviously have some distance there, and of course, Apple has not been really strong this year. But having said that, there's really no clean supply anywhere near, so we would not be immediately looking to short. On the other hand, down here, this area. It's a drop base rally formation, and this would be an area potentially where we'd be looking to buy. There is this trading right before here, and there is that little pop here, but it doesn't go very far. And so consequently, there is the expectation that there is still demand here that's waiting to be tapped here. So while this is not technically a fresh level here, there is the expectation that there is this level would still most likely work, and so that's about 3.5% down. And so this is where we'd be looking to express a bullish trade. Okay, if we turn to Microsoft, Microsoft right here, that's actually the all-time high, as well as the 52-week high here at around 430. Okay, price has actually been back here a couple of times. It kind of wicked in here very briefly and then dropped out of here. So this is not a fresh level anymore. But having said that, if it gets up here again, we would certainly be looking to see, how this reacted here. And if it showed signs that it was going to drop out of here, we would be amenable to shorting here, or actually expressing a bearish trade here. Most likely it is by buying a call, excuse me, a put. So that's about 2% above where we closed here. Again, we would be a little cautious just because price has been back here a couple of times. But it has not. But it basically it wicked in here and got immediately rejected. So there is a high likelihood that there could still be fresh, supply there's still some downward price pressure that's waiting to be tapped in there. Okay, so that's the story with Microsoft on the short side, and then about 5% down here. There is a demand zone here. Having said that, there is this wick here gives us some concern here. So we'll wait to see how price returns to this region, and of course, en route to this region, it could in fact create another area of demand, and so we'll see what happens there. Also, before I go on here, if you look below this video, you will actually see a link to another video that we did, and that's actually a somewhat a quick deep dive into the whole this concept of supply and demand. And so, if you want to learn a little bit more about the foundation of our trades, you could look at that video, and that goes into the supply and demand concept in greater depth. Okay, here's Nvidia, and also we should note here that Nvidia will actually be announcing earnings um, next week on the 22nd. So that would be on Wednesday. So we got after the close. So that's going to occur 5 calendar days from now and 3 trading days from now. So right now, we had just hit an area of supply, and so in fact we are actually in this trade now. We had bought puts here, so but we will definitely be out of this trade before the earnings announcement on Wednesday, and in fact, most likely we'll probably kill that. May even kill it on Tuesday. But we'll obviously see how the market is reacting early in the week. But this was a supply zone here. That's a rally-based drop formation. Price returned here, so in fact we entered this trade when it made contact a couple of days ago here, and so that's a trade that's ongoing now. Right now, if we look here below, if in fact, like I said, we'll actually be out of this trade before the earnings announcement. But of course, once the earnings announcement occurs, depending on the results, it could price could spike. On the other hand, if there is some level of disappointment, or it doesn't hit the whisper number or something, Nvidia could get driven down. At which point, then it could get driven down to this demand zone below here. Obviously, we'll keep an eye on that, and we'll look to see what the distance is between where current price is and where this demand zone here is. Obviously, if the demand zone is a short distance down, then we would not be getting into a trade because because of the fact that price could just get driven through it if it's too close. So we'll have to keep an eye on that as Wednesday comes around. So that's Nvidia. Taking a look at Meta. Here's where we are on Meta here. So right there is a drop-based drop formation here. This one, technically, this is an area of supply. Obviously, there was an exhaustion of buyers here. But having said that, this was created by the last earnings announcement. Okay, so this was not really created directly from supply and demand imbalance or by trading. This was a change of perception that got created by a disappointing earnings announcement. So we'll be a little cautious with that. So at any rate, though, that supply zone here, that's about a little less than 4% up, and then we have a demand zone here, which is about which is about 3%, 3.5% or so, almost 4% down from here. There's a rally-based rally formation. Again, this got created by an area, excuse me, by an exhaustion of sellers here. And so when price returns here, again, there's the expectation that there was upward price pressure that's waiting to be tapped. And at that point, then we could express a bullish trade at just above the 450 region here. So right now we're sitting at around 472. So we would need about a 4% drop to get to this demand zone. And again, up here, that's about a 4% rise to get to that supply zone. But the caveat again that that this one we would approach with some caution because of the reason that I expressed earlier. If we take a look at Netflix, right here we have an area, a supply zone up here, and that's around 7% above where we are now. All of this here that precedes it, this is really would be considered to be resistance, but it's not. But it's not really. It's not fresh supply here. Okay, so this right here we would categorize as resistance up here. Okay, so the first area though of supply that has not been tested, we actually would go back to November of 2022, and if we go back in time here, we'll see that right around there we have that rally base drop formation there. And in fact, it looks a little cleaner in the actual daily chart here. But you can see right here, there was a rally up here. Okay, this is an area of consolidation in here, and then there was that very bearish move out of there. So this is where we would be looking to express a bearish trade right out of there. So that's about 7% above here. And then right here, we have a rally-based rally formation over here. And that's again, about 6.5% down. So this is where we would be looking to express a bullish trade. Again, if you look at that link that's below this video, again, you can take a look at that, and that'll give you a deeper dive into this supply and demand concept. And finally, we'll wrap up by looking at our buddy Elon at Tesla. So here's where we are now on Tesla here. Right here, okay, we had a drop-based rally formation. Say right there, that there represents the last earnings announcement on or about April 23rd. Okay, and then right here, this created another area of demand here. Okay, there was a consolidation, and then notice that very bullish move out of here. There is that pause, and then there was a gap, and then a pop there. Okay, so right now we're sitting at this is about 8% down. So obviously you'd need a relatively sizable pullback to go from about 177 down to around 162, 163. And this is where we would express a bullish trade. But of course, with Tesla, 8% could happen pretty quickly. So we would be keeping an eye out on that. And then right here, this is an area of tested supply. Okay, if we go back in time here, right there in the daily chart, in fact, if I change this to the daily, we'll see right there that was a clear rally-based drop formation. Okay, so right here we were back here once. So this is no longer a fresh supply zone, but this is a fresh supply zone, but this would now be considered to be tested supply. So we're always a little more cautious because there's the expression, the first test is best. Okay, so when price returns here, this would be a second test. Having said that, it only kind of wicked in here, and it was only in there briefly. So there is a high probability that this level would still work again. But having said that, we would be looking to do what we refer to as a confirmation entry, and let price enter into this region. And then we would then once it showed signs of reversing, that's when we would actually enter the bearish trade. Once it exits the zone just below 198.30. Okay, and so we would basically be looking to get into the trade probably at around, let's say, 198.10 or even 198 even, and that would be our confirmation entry out. And again, this would be where we would this is where our stop out point would be if the trade didn't work. And again, this is where our entry would work, where we would get into the trade. And then if it came down to here, that would represent a 1-to-1 gain in comparison to our risk. This would be a 2-to-1 gain. That would be the 3-to-1 gain. Okay, so at any rate, that's the story with Tesla. So thank you very much for your time, and I will see you next time. Thank you.